We're here in the studios with no other than John Castore, and John's with Semper Home Loans, and we're going to be talking about buyer expectations, what to do, what not to do.
And this is very important. I hope most buyers are listening and you can spread the word about this. There's a lot of things that can go wrong that you may not have the information up front from a loan officer telling you what not to do and to do. And we email you pamphlets, but if you don't pay attention to that, it can ruin a deal. And you know, the normal ones are you bought a car during the process, or we do check 4 days before the closing if anyone pulled your credit. A lot of people don't know that. So if you don't tell them up front, we're not going to pull your credit. It's called a UDM report, where we see if you had any more inquiries on your credit report and if you accepted any credit during the process. And that happens 4 days before the closing.
And that could totally blow the whole transaction.
You don't tell them that up front. Hey, you might not want to have anybody. If you do, it has to be explained. So it might not kill the deal, but it could slow it down as well. You have to send us a statement. Oh, you bought furniture for $8,000. Okay, as long as the monthly payment doesn't mess up your overall ratio, we're okay. But I'm going to need a statement, and it can.
I've seen it happen.
Yeah, if they're going to iffy case it to begin with,
not with my
it could take a $25 a month credit card that could ruin the deal.
That's nuts.
It happened. It happens to every loan officer. There's nothing the way to avoid. Even if you tell them up front, it does happen. You know, they try to see if there's a loophole. There are no more loopholes, people.
No, there are no
Please
loopholes.
tell everything to your loan officer and your realtor. Don't try not to hide anything, especially if you own other properties.
Yes.
You know, we do a report for that. A title company it's called a mayor's report, where they will see if you're on any other deeds in the country. So if you own a house in California, tell your loan officer, please. We have to hit you up for the taxes and the insurance, even if there's no mortgage on that property.
Yeah.
And we're going to see it on your Schedule E of your tax returns
Sure.
as well. So please be upfront with anything financial to your loan officer, especially in the pre-approval stage.
Yeah.
You know, have to tell them everything. If a judgment's not showing up on your credit and you know you have one that is lingering, guess what? The title company is going to do a judgment search and a bankruptcy search and see if there's any – if you don't have a house for them to put a lien on to secure that lien, it's called an executive order or a judgment that has to be paid prior to closing, and it could ruin your closing or get you denied because you let this linger for so many years.
Yeah.
So it's very – I mean, I'm sure you go through this with
You've seen it.
You've seen this in – you know, you think you're done, and all of a sudden the closing blows up. It's happened to every loan officer.
Hospital bills,
medical bills,
credit card bills.
Yeah. Oh, yeah.
Right?
Absolutely. Right. And it happens during the process. So please be upfront and do not hold. It's strictly confidential between you and your loan officer, like doctor-patient confidentiality. But it's important not to forget anything financially in the way of any judgments, old liens that you may have come up, or any type of credit issues that you think you might have. Remember back in the day, you used to pay a penny for a CD?
Yes.
For 100 pennies, you can get 100 CDs. Well, you might have an $800 collection out there that's not shown on your credit that you didn't know you were going to be charged $800 for these CDs.
The 90s.
And that could, back in the 90s, you could get, what is it, BMC or something like that?
Yeah.
Yeah. Columbia House, that was the one.
Columbia House, yep.
That's right. Yep. We all had those pennies that we sent in.
Here's another buyer expectation I want to share in the seller's market. Okay, when there's multiple buyers sometimes bidding on most properties, you know, if your real estate professional tells you that the property is priced right and they've done their analysis and this and that, you want to keep your offer within 95% of that property. And if there's multiple buyers on there, and John, you see your buyers all the time walk away discouraged.
Right.
They don't have the right expectations up front. The days of going in and underpricing and undercutting, it's not a buyer's market.
It's not happening. You
got to go with the market if you want to win. And people are like, well, we got to try. Look, I understand that. That's human nature. Like, oh, the doorknob is broken. What do you try to do? You try to open the doorknob, right?
You don't want to insult the seller as well. I mean, it's insulting in the seller. Even if your bid might be decent, you're not supposed to turn your way, but you know what happens. It's an insult to the sellers.
Culture changes. The culture changes with the market. So basically, it's like it's like going to Japan and not bowing down to somebody, right? Like it's not as a greeting.
Right.
It's going out and shaking their hands and they're looking at you like, what are you doing? It's just a whole different culture. The seller's market is not the same as the buyer's market. So You want to make sure that you have the proper expectations if you want to win in this market, because there's nothing worse than lowballing an offer and having a seller walk away, and then that beautiful house that you really wanted,
it can be crushing.
It would have really only cost you $20 more per month in that mortgage payment from making an extra $15,000 higher offer.
Yeah, exactly.
That got accepted. Now that house is gone. And now you're out there searching in a very low inventory market, and there's not much out there.
It can go the other way, too. We can only lend on the purchase price or the appraised value, whichever is lesser of the two. Mm-hmm. So if it's a bidding war and you bid $15,000 over the listing price, but it only appraises for the listing price, a lender can only lend on the lower of the two. So you're bringing money to the table, or you're going back to negotiations.
It's happened. We actually recently sold several houses where they didn't appraise. Out of 5, we were able to, I think it was 3 that we were able to get back. And then 2 of them, we couldn't talk the appraisers up at all. We couldn't.
Right. You can appeal the appraisal, but in many cases, the appraiser will say, I looked at those comparables and didn't warrant the value to be increased because it wasn't similar. But it definitely happens. And in most cases, you're getting seller credits on top of things, and that can do it too. So sometimes they'll put it back down to the appraised value, the lower of the two, and then they'll wipe out the seller's credits. So now you may not qualify because you really needed those seller credits. So it works in both ways. That's where
sellers have a hard time understanding that.
Yeah, but if you have someone like your team and you explaining this to them, it usually doesn't get to that point. I've seen some other realtors that might not just be experienced enough to handle negotiations like you guys can, and that's why it's so important to surround yourself with good realtors.
I would say a lot of the people that we surround ourselves with, actually all of them, as far as professionals, we totally feel the same way, including yourself. And the hug fest over here is over, listeners. But no, it's true, because when you're out there on the road, you tend to see a lot, and you tend to see a lot of what buyers should not do. And first off, what they should not do is hire an inexperienced realtor. And if they do hire a friend or a family member that started in real estate, make sure at least that they have coaching, okay? And that's fine. It's okay, because we all started somewhere, right? I would say the same thing with a loan originator. Make sure you don't hire somebody that's, wet behind the ears, and somebody that doesn't have proper coaching, okay? And that's why, like at HomeSmart, to talk about HomeSmart real quick, my brokerage. One of the reasons why we went over there is because they have a university downstairs, HomeSmart University, right? They educate all of their agents. All of our agents are fully educated. We have classes weekly, all of the time, on buyer representation, seller representation, what to do here, there, legal classes, continuing ed classes. They do it all. They even do the pre-license class down there.
Way ahead of the
curve.
Absolutely.
And there's there's like 2 or 3 other brokerages that are starting to do this as well. And kudos to them. I think that is phenomenal. So when you have an agent that is very well educated, very well rounded, they're going to do you right. And there's a mentorship program too, right? So there's somebody walking them through the paperwork, walking them through this and that. So, you don't have to worry about newbies when you're working with the Despirito team. We're only hiring top qualified, top-end professionals, obviously. And, but again, be careful with who you select to represent to help you buy a property. That's all I was getting at.
Absolutely. And the process goes much smoother for the clients. That's what it's all about. We're all here for the customer, for the borrower, for the buyer, for the seller, to make sure it goes as smooth as possible.
Yeah.
And everyone's heard of these nightmares that can happen, and it's all due to inexperience. And you're right. You have to start somewhere. And I'm here for, whether you're doing a loan with me or not, I'm here for questions 15 hours a day. And I constantly get quick texts. I text them back. They know the answer's correct.
Yeah.
I've been doing this for a while. And that's what it's all about, the actual customer itself.